Joe, the elephant in the room happens tomorrow after the bell. Nvidia reports. Does everything come down to what this company reports at this point?
I think in the near term, yes, it does. Unfortunately, I wish it wasn't that way. I wish we could look at the earnings that Stephanie is citing and recognizing that it's a much better environment for corporate profitability than we anticipated. But unfortunately, the last several weeks, we've created this speculative fervor surrounding AI, and it's landed squarely in the semi names. We obviously see what ARM Holdings has done the last several weeks. We are seeing what Supermicro is doing as well. And it's extended into Nvidia to a certain degree.
Down 6%,
yeah,
right? It's people getting a little bit skittish.
It's unavoidable.
Ahead of the number. You look at what. It's sort of like, what else can they? I think Kramer, this morning during the 9 o'clock hour, which we did together, was like, what else? What else can Jensen Huang do?
Well, we've created nearly impossible expectations for Nvidia, and at a certain point, the comps are going to get more difficult as you move through 2024, and that's the reason why I've said, look, if you're not in Nvidia, you have to have a wait-and-see approach. Even if the stock gets away from you and goes higher, I think it'll go higher in a parabolic sense, you'll get an opportunity at some point in the future when those comps begin to get more difficult.
All right, so you're bleeding about $44, Sarat. Josh, I'll get to Josh in a minute. I'm sort of saving it up on purpose. But Sarat, you own this name too.
I do.
And what do you think is truly riding on this report tomorrow?
So I think a couple of things. I mean, expectations, to Joe's point, are huge, right? It's 20 billion is what is the estimate. 22 is the whisper. It's probably closer to 23, if not north. But I think what's really riding on it is, what are they going to talk about the total addressable market? What other markets are they looking at, and what are they going to talk about double ordering? Because that is the key that all investors, including ourselves, are fearful of. Now, stock's been parabolic. We've taken profits along the way. It's a 2% holding for us. S&P's 4%, but I'd be careful here. And to Joe's point, if it pulls back, it could be a chance for new money to get in. But if it goes up, then you just kind of wait and see.
I mean, I realize there are other things going on today, and we'll get to those and the impacts that they're having on the market. But to me, it's unavoidable to start here as you start a new week, Josh, because even you suggest it's, quote, the whole ball game for the most crowded trade on earth. And that is what Nvidia is going to deliver tomorrow, whatever it may be. And the impact that it's going to have on the market, you've got to believe it's going to be a sizable mover one direction or the other.
I think so, but a negative outcome for Nvidia is not necessarily a negative outcome for investors in the rest of the market, because I think there's a lot of market cap in these top 7, or these days top 6 stocks that could eventually find a home elsewhere if they're disappointed, because the gains that we've been seeing just can't continue. So I agree with a lot of what Stephanie had to say. The old timers will remember this phrase. I don't think they use it anymore. Tape reading is dead. But in the old days, you would ask somebody, you'd ask a guy on the floor of the New York Stock Exchange or a trader on a desk, what's happening in the market, or what's the tone of the market, or what's going on with the tape. And they would say, S's over N's. And what that means is the S&P names are outperforming the NASDAQ names. And then sometimes it would be vice versa. It would be N's over S's. I think we're going to be in an S's over N's environment going into spring. And I wouldn't be surprised if the earnings report that we get this week from Nvidia is a fantastic report, but the reaction disappoints. And I want to do a little bit of myth busting with the time that I have here, Scott, so just bear with me. A lot of people think that Nvidia represents some sort of like mega bubble or some sort of speculative mania. It's really important that we understand they're going to report $10.5 billion in net income if the estimates are right. They did $1.4 billion in net income this quarter last year. It's a 10x in profits. So when you understand that context, even revenue, we're looking for $4.59 on $20.5 billion in revenue. That's a 240% jump in revenue from just last year, this quarter. So that's the context in which we're talking about this stock. It's one of the biggest winners of all time. You might live the rest of your life as an investor and not see anything like it ever again. And be prepared for this company, to Joe's point, getting to a point where nobody could be impressed anymore. And that's a very real possibility.
Well, that's
so
a problem,
I've trimmed the stock.
Isn't that potentially a problem given the incredible rise that it's had? Over the last year, I mean, you could pick time frames and say, oh my God, this is incredible. Oh my God, that's incredible. But I just wonder what that means to the greater story. If they fail to impress to a degree that the stock move would, potentially warrant, what happens?
So you'd have to define problem, because there are people sitting in this stock with thousands of percentage points in returns. They could afford to give up some. That's number one. Number two, I think the more interesting risk here is that all of these top market cap stocks are so related to each other. Let me give you Nvidia, for example. People think that every time this company reports earnings, it's like some massive reaction in the stock. The reality is this stock moves in advance of those numbers. After the November report, the stock fell 2% the next day. After the August report, the stock rallied 3% the next day. Last May, it had an explosive move, but it's not always a big post-earnings mover. And the reason why is because the market moves the stock in advance. What happened this year is that Alphabet, Amazon, Meta, Microsoft, all they did was talk AI, and that rallied Nvidia in advance of this number.
Yeah,
so that's what I think is the risk here.
The other part of the risk, as Evercore, Steph, says, it's the stock that is the market, speaking of Nvidia. I'm curious as to whether the whole AI trade, in some respects, is on the line this week. If you consider the moves in some of these names since November 1st, whether it's ARM or AMD or Palantir or ASML or Snowflake. Now, I didn't go down the rest of the names on my list. I stopped at the ones that are only up 50% or better since November the 1st. But you could go down that list and find some that are 40s and almost 30s and well into the double digits as well. I'm wondering what those stocks are going to do.
Oh, they're all going to trade together, but some have more juice than others, right? So I own IBM, for example. Fully expect it to be down if Nvidia is down, but it'll be down a lot less. A, it's not as owned. It's also misunderstood, and I think the valuation, there is support there. Snowflake.
You're new into Snowflake?
I fully expect that to be down. Look at it today. It's down 6%, just like all the other high flyers are down. But I'm more inclined to actually buy it and buy more. I'm a very small position, and we talked about it. I know it has a lot of beta to it, and so I'm going to be very careful. But I do think that the story is very strong. The total addressable market is $290 billion. By the way, AI, total addressable market, according to McKinsey, by 2030 is $1.8 trillion. There is so much money to be had in AI, but I'm just trying to find the ones that are a little bit less.
Made-up number.
That's the point.
It might be a made-up number,
that's where I was going to go.
But we're seeing really strong results across the board from all of these companies.
Yeah, but we're not necessarily seeing monetization to a degree that necessarily meets the hype.
Okay.
You are in a couple of instances, perhaps, and even then it's maybe a stretch.
No.
But a lot of these stocks are going parabolic as if they're all monetizing AI to some massive degree at this particular time, and that's just not the case.
I mean, I think Snowflake is going to do 30% plus in product revenue growth with gross margins in the 70s. That's absurdly good. Let me give you an example of Broadcom. So their AI business was 10% of their total revenues last year. It's going to get to 25% by the end of next year. That is real monetization, Scott. So not everyone's going to see monetization, but there certainly are companies that are seeing it. IBM, too, it's just a much smaller piece right now. But absolutely, you want to have exposure, and it depends on your risk tolerance and profile as to which ones you want to be in. I don't have the patience or the stomach to be in an Nvidia. I just don't.